reporter. Right now, we are all feeling the pinch in our wallets, especially with major holidays like Thanksgiving and Christmas just around the corner.
So inflation remains high, interest rates are climbing too. So tonight, we're taking a 360 deep dive on what this all means for you and your family in the months ahead.
We're getting multiple perspectives on how this hike will impact things like loans, credit card interest rates, and the current housing and rental market.
All right, we're going to begin tonight with the interest rate hike, why it's happening, and just what it does. So today, the Federal Reserve continued its assault on inflation and raised interest rates by an aggressive 3/4 of a point. This is the fourth rate hike this year. This makes borrowing money for things like homes and cars more expensive. But the Fed then hopes that increased cost discourages people from making big purchases, which can cause prices to fall and then ultimately cool the economy. What is not clear is when the central bank will decide to ease up on these rate hikes.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
And multiple reports tonight that rate hikes are expected again in December and in February. But the AP is reporting that the size of today's rate increase could reduce the size of the next one.
The rate hike is coming right before the holiday season, as Coloradans are ready to spend with credit cards on hand.
Denver 7's Bayan Wang spoke with multiple consumer experts and looked into how today's interest rate hike will impact your spending.
We might just have a light Christmas this year.
We're all going to do a little less buying at Christmas time.
The season of giving this year just lost more of its holiday appeal.
Inflation is still not coming down. It is still at 8% nationally. Colorado is even worse.
Record inflation despite three previous 3/4 point interest rate increases this year, prompting yet another one by the Federal Reserve Wednesday. Consumers pay the price, but according to MSU Denver's Kishore Kulkarni, it's just a tough lesson of economics 101.
When you raise the interest rate, the borrowings with the banks will go down. And if we borrow less, we spend less. And if we spend less, the prices go down.
This time around, managing inflation is a little more complicated considering the major contributing factors, including the pandemic, international conflict, and supply chain shortages.
I've been teaching for 46 years, and I've never seen a time period where we've had as many challenges all at the same time.
How have we been responding?
Not as well as we could. I think we're trying to fix it with the Fed raising interest rates, which isn't going to do anything to help you at the grocery store.
Or at the gas pump for that matter. But historically, it will deter many from buying cars and homes, and in this season, holiday presents.
It's the first time we've had to really budget.
And this shopper isn't alone. Data from Deloitte Insights shows Denver consumers will buy 7 less gifts this season, with an increase of 41% of shoppers admitting they are in a worse financial situation this year compared to 2021.
From a retailer's perspective, the big challenge is how much of the increased interest is going to drive consumer demand in a different direction.
Experts say this means bigger discounts and promotions earlier in the season, one that may be less about giving and more about saving. Bayan Wang, Denver 7.
Now, for prospective home buyers, higher mortgage rates may seem discouraging, but some perspective here might actually give you some hope. Now, from the late 1970s to the mid-1980s, mortgage rates were in the double digits. They topped out at 18.63% in October of 1981. And while home cost much less, of course, in the 80s, incomes were much lower. And many people still found ways to own homes. Denver 7's Micah Smith continues our in-depth coverage with talking to a real estate agent with how you can still make home ownership a reality.
I think that everyone was just kind of spoiled.
I think buyers are a little more nervous.
If you think interest rates are high now, try living in 1982.
The interest rates were about 18.5%.
April Denman, owner of Denman Realty, says even at 18%, 1980s families still bought homes. And for anyone looking to buy a home now, there's hope.
So in January of this year, we had 712 houses on the market. Today, we have about 7,400 houses on the market. Normally, homes in Colorado, we appreciate 5 to 6% a year. The last 2 years, homes appreciated 20 to 24% a year. Interest rates are high, but they're not the highest that we've ever seen.
To be fair, homes and salaries were a lot different 40 years ago. For context, we researched the 1982 cost of living. The median family income was $23,430. Median home price was $69,300, which means homes cost 3 times what a family earned yearly. Today, the median family income is $70,784. Median home price, $403,556, almost 6 times what an average family earns. Denman says interest rates are another home buying challenge, but they're not one size fits all. They're personal.
The programs that work for clients, they're not having to pay the high 7 interest rates. I just locked the interest rate last week at 5.3%. We're locking in one later on today that's still in the 5s.
Denman says buying a home in Colorado is hard and homes are expensive, but it's not impossible. Reporting in Denver, Micah Smith, Denver 7.
Thank you, Micah. And let's take a look at the alternative to home ownership and talk renting. April Denman shared data with Micah from the Apartment Association of Metro Denver and the Federal Reserve database. It shows in Denver the average price of a home and median rent have risen at the same rate since the 1980s. While it can feel out of reach, Denman still says home ownership is the better route.
So the rent prices have been going up, and like we always say, okay, the interest rates are 7-8% now, but if you're renting, that's 100% of the interest rate. So we feel like even if the interest rates are high, you're still better off buying instead of renting because the rental rates are going up.
Denman also says housing inventory is going up, so you have more options to find something that fits your family.
And you can